And welcome to this week's edition of Selfwealth Live, the technical analysis edition. We're all here. Thanks. I can see there's a few chats there going already. So thanks for waiting. Once again, we're here for another great week in the markets, Jace. Doesn't seem to be a lot of movement, but it's once again edging up bit by bit. How are you today?
Hey, Rog, I'm good. Yeah, some really interesting movement in the markets generally. I think we can go through, and yeah, look, I think that should make for an interesting show today, and also our viewer stock codes later on. That's always fun to go through. So yeah, it should be pretty good, Rog.
Fantastic. Well, I'll set the scene, obviously. If you're a new person to the show, what we'll do is we'll go through the main Aussie markets. We do have a general question from a viewer, which we touch on a lot. So I'll get you to run through it, on a general basis once again, Jason. It's all around managing stop losses and how you would do it, right? So we'll go through that, and at the end, after that, we'll go through the main part of the show. We'll go through one ticker of everyone and see what ideas we can come up with today, and what your thoughts are, Jace. But before we do that, and I've also got to run through the exclusive offer for October as well. Before we go through that, let's jump on that disclaimer. Thanks, Jace.
Yes, just a quick note that everything we do today is general commentary only, no personal advice, and this disclaimer or this slide goes through all that. I'm not part of Selfwealth. I'm Motion Trader is my business, and you can see my details at the top with licensing and general commentary and all of that. And beneath there, you'll see the Selfwealth disclaimer. Same thing, licensing, general commentary is all in there.
All right, fantastic. Now, before we get ahead, once again, welcome to everyone on the other side of the screen there on the show. We've already got some great ideas coming through there, which is great to see. Now, last week we talked about an exclusive offer for Selfwealth viewers, and for existing clients, they were nabbed up quite quickly. Obviously, it was limited to 20 people, and those existing clients got 20 free trades. So well done on jumping on those. There is still allocation there for new people, new clients. So if you're trading with another broker and you're interested in checking out Selfwealth and seeing what benefits you can have in using our platform, then it's free to sign up, it's free to use at the start, and you've still got the ability to get 20 free trades. So there's 10 basically if you just sign up, and then there's another 20 on top of that if you decide to move across. Obviously, you've got to sign up for an account first, but there's the email address, the terms and conditions are all in the description below. Now, the code word for today is, if you haven't heard of this famous investor, it's Buffett, right? That's the code word for today. So if you're a new person wanting to come across and try out Selfwealth, the code word's Buffett. Use that in the email to us, and you'll get access to an extra 20 free trades as well, valid for 6 months. All right. So it's an incredible offer. Feel free to jump on board. All right. Before we go ahead then, Jace, let's, we're going ahead now. Let's have a look at that Aussie market.
Okay, so we'll start off with our ASX chart. So I've got the, so here we go. Here's the ASX 200. And I think this underlying price structure remains constructive. So the ASX 200, it's traded around the 50-day moving average for close to a month. And this follows that pullback we had earlier from the August all-time high. I think the fact that the ASX 200 has been finding support around the 50-day moving average, I think that's positive. And it suggests to me that the dips are being bought, and that this is indeed a consolidation within what I think is an ongoing bullish market. Just looking at the price action over the last few days, prices have rallied off the 50-day moving average. And this is actually the strongest rally sequence that we've had since mid-August. And you've got to go back over here into August to see a rally sequence like we've currently had. So I think that's a good thing, and that indicates that the sensitivity, I think, remains to the upside. It's interesting to look at what's happening within some of the sectors within the ASX 200. And one of those which I want to show you now is the materials index. So the materials index, of course, is dominated by the mining stocks. And this has essentially been trading sideways for 3.5 years. I'll actually just jump to a weekly chart. You can see this range even better and we just step back a little bit. So you can see this goes back quite a way. Here's 2004 all the way over here. And then from 2016, there was a strong bullish phase. And then the last 3.5 years has been pretty much sideways price action. But I think the materials index is on the verge of a new trending phase. So just on the weekly chart while we're here. So it's gone from trading below the moving averages to now flipping to the positive side of the moving average. So when it does that, it sets the price structure for potentially higher levels. So I think that's the first point to note. We've gone from below to above, and moving averages are also crossing. So this would be the 50-week and the 100-week moving averages. So they're crossing and turning higher. So another potential positive there. Coming back over to the daily chart, just looking at it in a little bit more detail. And what's happened with the price action over the last couple of months, it's really started to become established above the moving averages. We had this earlier in the year, the first half of the year, it was pretty much below the moving averages for much of that time. There's the April sell-off. And just in the last few months, it's worked its way back above. The moving averages have crossed. And as I say, it's now become established above the moving averages. And it's also following this 1 month consolidation, well, about a month of consolidation through September. The last couple of weeks, we've had this strong rally off the 50-day moving average. And so that's another positive factor. I think this is bullish price action, and I think the materials are a big part of the ASX 200. So I think that supports the bullish outlook for the ASX 200 generally. If this large section of the market can really start to break out of this 3.5-year range. Coming back to the ASX 200 briefly, and I think we should be positioned. I think we should be positioned for further strength. So that's what this structure I think is favouring, further strength. Timing is always another matter. I think timing is always less clear. I've been talking about the potential for a consolidation, well, for this consolidation for the August high to potentially stretch out and last a bit longer, maybe a few more weeks. So one possibility is prices could come back and retest the moving average, and then from there you would get the platform for higher levels. So that's one scenario, that it could take a few more weeks of just chopping back and forth. But look, having said that, nothing's saying that the market can't start rallying in the near term. So that's why I want to be positioned for further upside now. Whether further gains come in the near term or after more consolidation, we can never be sure. We can never be sure that further gains are going to come at all. Market could do something completely different. But I don't think that's the way this is lined up at the moment. For me, what's important is not so much the timing, but being positioned for the bullish trend. And then again, managing risk, really important, managing risk with wide trailing stops. While the structure is bullish now, at some point that's going to change. So always having that exit plan in mind for that eventuality.
Yeah, I'm glad you brought up the materials index there, because it certainly had an impact on my portfolio in a positive way. But as you say, being positioned is a great place to be. And then we're going to touch on those trailing stocks after we get over these indexes. So let's have a look at the US index then, Jace.
Yes, over to the S&P 500, and well, it's just completed another brief correction or brief consolidation. Only took a few days to pull back and then hit new all-time highs on Friday. I thought this most recent consolidation might have lasted a bit longer, maybe enough time for the 50-day moving average to catch up. But that hasn't been the case. Like the previous pullbacks that we've seen, it's really only lasted. The pullbacks are really only lasting a few days. That's been the pattern the whole way up, pretty much since prices broke above the 100-day moving average back in May. The consolidations have been short and shallow, and this is why I believe we shouldn't be messing with the bullish trend when prices are rising as they are. It's a case for me of wanting to be long. I want to own stocks, not trying to trade around, trying to pick tops and buy back in and whatnot. It's just staying with a broad bullish trend, looking for those opportunities for buying. I saw some interesting stats last week. I was telling viewers of my Friday strategy session about this on the other day on Friday. And so what those statistics are is that the S&P 500, it's just had its. Let me just sketch in September. So there's the month of September. So this period through here, this is actually the 14th best September ever for the S&P 500. So the S&P 500 was formed back in 1950. That's when it came into being. So since 1950, this is the 14th best September ever, and that was 3.5%. So it's up 3.5% for the month. Now September, as many people will probably know, is notoriously a bit of a tricky month, a weak month on average, and many people avoid September during when they avoid stocks. Many people avoid stocks during September, and they hear things like sell in May and go away and all that, and September being a volatile month, so people can be inclined not to get involved during September. And I actually heard one local commentator say pretty much exactly that at the end of August. He said, look, my firm's going to sit it out during September. And well, I think this is a good example. I think this is a good example of why we should follow the price action and not the calendar. And sure, be aware of seasonality, because it can be a factor at times, particularly when markets are below moving average during seasonal periods that are historically weak. It's something to be aware of. But I always think that the price action is what matters most. And when you're in a rising trend, like, sayings like sell in May and go away and September's volatile, yeah, look, it all sounds good, but it's a price action which is the deciding point for me at the end of the day. The other interesting thing about a strong September is what it means for the rest of the year. So this is interesting, Rog. So as we've just discussed, this is the 14th best September on record. So what happened the other 13 times for the rest of the year? So October, November, and December. Well, 11 times, 11 out of those previous 13 times, the market went up, and 2 times it went down. So 1973 and 2007 were the down years. The average gain for the last quarter was 5.5%. And so that's a pretty interesting historic stat. So it's only happened 14 times, and we don't know what's going to happen for this time, but the other 13 times, an average final quarter of 5.5%. Of course, no guarantees we'll see a strong gain in the last quarter of this year, but momentum matters, and it often persists. That's what we've seen in the past. I think the odds favour higher levels, not a reversal in the over the next few months. From a structural perspective, the underlying conditions remain bullish. Key factors I'm focusing on are these rising moving averages. The 50-day, the 100-day are rising. Prices above the 100-day moving average. That's a positive sign. I'm quickly going to jump away from the US for a moment just to show you one thing in Europe which was interesting and I think quite telling over the last week. This is the Euro Stocks 50 index, the largest 50 stocks in euros in Europe. And look at what's just happened. Prices have just broken higher, and that follows 4 months of trading sideways along the moving average. And now we have a break higher in this key European market. I think this is another sign that equity markets remain bullish and remain in a bullish phase. This sort of breakout I'd expect to see this to continue higher over the coming weeks. Looking at the S&P 500, I continue to believe it's a case of staying long stocks. Overall structure is positive, as we discussed, and I think the path of least resistance is up. Yes, there can be consolidations, there can be pullbacks. We could get a pullback to the 50-day moving average. These things are always possible, but that underlying momentum that underlying trend does remain to the upside. Until I've got good reason to do otherwise, I think it's a case of staying invested, trying to see your pullbacks. And in these situations, it's the dips and the consolidations that are often the buying opportunities.
Yeah, fantastic. Well, obviously, to me, as I listen to you, it's great to have this knowledge about what's happened a little bit in the past, right? And we know the past doesn't equal the future, right? But my confidence, or investor confidence, can be built on some of this information that you've received that's in favor of what's happening now, and it's exactly why we teach what we teach around learning price action, because it's such an important thing when it comes to confidence in the markets and being able to position yourself, and regardless of time as well. We all know it's going to pull back at some point. Well, yeah, you'd think it would, right? As like anything, but how to position yourself and when to manage it is the most important thing, I think, in learning all this. So it's fantastic data and information for them.
I think what it doesn't tell us. History doesn't tell us what's going to happen next. We don't know. We don't know what will happen next. But I think what it does do, when we look at some stats like that, I think what it does do, I think it dispels the myth that just because stocks have had a good period doesn't mean they can't have another strong period. Like a lot of people, like this whole way up, people have been disbelieving the market. They'll be saying, "Oh, the market's, it's had a big run. It's I'll wait. I'll buy on the next 10% pullback." And if they've been doing that, the next 10% pullback is yet to happen. So it's it dispels that myth that just because prices rally strongly, it doesn't mean that they've got to pull back sometime soon. Momentum can persist for longer than people imagine, and that's I think that's the important thing to take from a study like that. It's like there's every chance the market continues higher and the momentum persists.
Yeah, fantastic. All right, what's happening over in the Asian markets?
Coming over to the Hang Seng, over to Hong Kong first, and well, it completed a short pullback and consolidation last week. Index is now back up to a new recovery high. I was pulled back a touch in the last couple of days, but nonetheless, on Friday it made a new. When was that? That was on Thursday last week. Made a new recovery high. This is actually the highest level since July 2021. You just compress this a bit, we can see where that is. So back over here, just a touch over 4 years ago. So it's been a strong period for the Hang Seng. Path of least resistance remains up. This continues to be a market where the pullbacks have been buying opportunities, and I think the key strategy in play here is letting profits run. I think that continues to be the play. And then over in China, and it's a similar story here, but one with a bit more consolidation. Just looking at the price action over the last few weeks, prices have been tracking sideways since mid-September, and that's been allowing the 50-day moving average to catch up. Prices are also edging through this key resistance zone, which comes in around about 15,000 broadly, and we've looked at this before. This stretches back to 2015, so it's been a key marker for 10 years, and it's just starting to edge through that now. I think the Chinese market's ability to hold its ground and push forward with this strong resistance around current levels, I think that's positive. I think it's positive that it's been holding its ground and edging upwards. I'm also looking at this as a big basing structure. So this whole period from where's that? Probably around like late 22. Like just looks like a big rounding basing structure that prices are now starting to lift up from. And it's taken time. Big bases can take time, but then they can lead to big upward trending phase as well. And it's interesting because the news flow around China remains downbeat. It's like, well, the news flow I'm seeing, it's all about about growth not being particularly robust and the building sector problems there still, but the price action in the Chinese market, it is starting to move upwards, and that's often the case. that's often how recoveries begin. They begin around downbeat news, and then things become less bad, and the markets start to move higher. I think this is a market with more upside potential. I think it's an interesting one to be aware of and potentially be positioned in.
Fantastic. Okay. All right. Let's get to the viewer question of today. Now, we touch on this a lot, but it's such an important factor in having a plan, having your plan. And I think I've got an example we could potentially use. How do you manage your trailing stops, Jason? Now, it's a very loaded question, and we've done shows in the past about this. So you just have to scan through some of those original shows where we will teach you, doing a lot around education, and it's around trade management. So check out the playlist that's on the Selfwealth, a YouTube channel there, and we talk a lot more in depth. But I had a person ask me yesterday, how would you manage their stop on Drone Shield? So we could use that as an example, because that's almost gone parabolic, right? Can we use that as an example? And if you'd bought in at around 138, Jace, which is probably around a motion trader entry, style entry, how would you manage your trailing stop with that at the moment, in general?
Yeah, well, my trailing stops are mostly worked out through my motion trader system, so they're calculated, and so it's not like various ways you can do trailing stops. Some people will use a percentage. They'll use, say, 20%, 25%, 30%, something like that. They use a fixed percentage. Some people like to use a moving average. They might use the 50-day or the 100-day moving average. Others will just cast their eye over the chart, and they might have a stop loss below. Bit hard with this one because of the scale. They might have stop losses below like previous, significant pullback points. So many different ways to do it. I use with my personal motion trader portfolio. They're all calculated. They're based on a stock's average daily trading range, and I calculate the average daily trading range over the last I think it's the last couple of weeks. And it's so I don't get my calculator and do this by hand. It's all systemized and program the rules, and I put the data in, and I just get all the numbers done for me in a few seconds. So I calculate the daily trading range over the last couple of weeks, and then multiply that average range by 10. So if the average trading range is 10 cents a day, the width of the trailing stops will be 10 times 10 cents. It'll be $1, and so I get the trade's high, current high, and take away $1. That's how it would be calculated. So Drone Shield is going to have a very wide trailing stop, because look at these ranges. Like this range here, that's what's that, 450. That's almost a $1 trading range in a day. So it's averaged over a couple of weeks, but nonetheless, here's another huge day. It's like 470 to 624. It's they're $1.50 thereabouts. So they're very big ranges. So it's going to have a very wide stop. It's going to be well below the 100-day moving average. It's going to be close to where the 200-day moving average is. I suspect the calculation is going to come in somewhere around like $1.50. So let's put it on. This isn't the motion trader stop, but it's one of the indicators you can get through TradingView, which is a charting service which I use. Doesn't cost. It's a low cost service. It's not my system based package which I use, but it's good for doing the show like we are today, and I'll look through the charts during the day myself, and put some of these indicators on it from time to time. But this is an approximate of the motion trader stop. Let's just put that on. And let's say, so the motion trader entry for this was down around 420, about around 121. So the moving average is crossed. It broke to a 70-day high. So it's around 121. So it's around here in April. And yeah, it's a little bit higher than I thought. I was thinking it might be around $1.50, but it's already up at $2.50. So that's the trailing stop. You can see it tracking up beneath the share price. Gives it a lot of room to move. And this is a really interesting thing, because a lot of people will, they push back on this to me and say, you give your stocks way too much room to move. I want a much closer trailing stop. But the reason it's wide is, well, one, it's a calculation. It's not a discretionary thing. So I back test this over thousands of trades over 30 years or something like that to come up with a marker which works well across market cycles, across many stocks. A 10 ATR is a number that allows you to stay on a large medium-term trend and stay on it for maybe 1 to 3 years. Yet we can set a closer stop. Let's say we have. Let's say, look, that's just crazy. Let's not use 10. Let's use 5. Let's see what happens. Well, it's worked on this case. Often you find when you set a close one that it does get knocked out along the way up. This has been an especially strong trend, so a tighter trailing stop would work. But more often than not, I find the tight stops are great for keeping you on for a relatively short time, maybe a few months. But if you want to get those big multi 100% gains, it's the wide ones, which I think there's no substitute for if you want to get big trends. So that's how I'd be managing Drone Shield, with the wide stop. And what's another stock we could look at? So I'll show you, let's see, I'll show you one which is currently in my portfolio, which comes to mind. So this is a stock called Supply Networks. Came up in the Motion Trader Signals back in, I think it was back in 2022. I've had it for a long time. And you can see how the wide trailing stop on a stock, I'd call this I wouldn't call it a normal stock, because most stocks don't go up several 100%, but Drone Shield is just something which is completely out there on its own with what it's done. Look, you can just see how the wide trailing stop, it gives it that room to move. And maybe I'll try my example now. What happens if I put it on to 5? There you go. It didn't last very long. Look at that. This is a point I was trying to make before. So I've been in this stock for 3 years. I think for 3 years, had I set a 5 ATR stop, I would have been in it for like 3 months. So, and that's a difference between a multi 100%, maybe it's a 300% gain for me, and maybe picking up, I don't know, 20%. So that's why the trailing stop is wide. You've got to see off a multitude of these pullbacks along the way. And I think for people who don't have a calculated exit point, or don't have a strong structure, at least around how they work out their exits, they all too often get shaken out on these pullbacks. There's lots of uncertainty. Like, we can look at this now and like, this is just a blip. But if you're here in real time and you've just you've recently bought and you're holding, and this takes a month or two, and you see this decline, people go, oh, where's it going to end? When's it going to end? And they sell, and then this can happen. So the wide trailing stops, it takes that guesswork out. It takes a lot of the anxiety out of it, because you're not second guessing what's going to happen next. You've got a calculation. So yeah, it's a fascinating area, Rog, and it's an area which I think a lot of people could benefit from if they took the time to understand how it works, why it works, and the purpose of keeping those stops wide rather than setting them nice and close. I think so much money is lost through trying to protect open equity with tight stops. Much better off, I think, giving your stocks a lot of room to move. Yes, you risk giving a nice chunk back at the end, but look what you can make. It's what you can make in between. It's what you can make through here. Well and truly, from my perspective, compensates for what you can give back at the end.
Yep, fantastic overview there, Jason. I can vouch for. There's a comment in there saying, "I think I'm learning as much as everyone else from you, Jason." I reckon I've learned a lot more than everyone else from you, Jason. Originally, I was actually using tighter stops as well, and as you say, it wasn't long before I switched, and you convinced me. And I think the multiple. I've had multiple stocks in multi, 100% gains now because of this wider trailing stops. I'm not monitoring my portfolio as much because I'm just allowing those real winners to win, and it's giving me these great gains. Now, obviously, that's our system. That doesn't mean it has to be your system. If you want to choose a lot tighter and get in and out more often, then you can do that too, right? But I think that last 10 minutes of this show is an amazing example, and how you can use TradingView, or you could potentially use Jason's service there, who has calculated stops, entries and stops as well, right? So fantastic there, Jace. Good overview. All right, let's get on to some tickers. G'day, Bob. How is ART looking?
Let's have a look. Yeah, well, it's above those moving averages, which is the first thing I look at. The moving average is still moving up. I wouldn't say we don't have an established trend here at this point. We've got the potential makings of one, but it hasn't. But it still really would say it's still like in this large maybe basing phase at the moment. It's has had bursts of momentum, but it hasn't really been able to break away. So we saw that back in late last year, and then now it's getting that start, but then it's pulling back. If I was in this, I'd and it was recently a motion trader signal, like the moving averages crossed, and we had some momentum to the upside. So that's so it's going with the momentum now, seeing will this momentum kick and turn into something larger. At the moment, we've got that initial push above the moving averages. Now we've got the pullback to them. I think what's key now is, can it now hold on to most of its gains since, say, like the July low, this recent gain period. Like, if it can now consolidate and just hold above the moving averages, maybe if it can just establish a bit more of a base over the next few weeks, then it does set up the potential for further advance. So if I had this one, I don't have this one, but if I had it, I'd be happy to continue holding it, give it a bit more time. That said, I'd have my motion trader stop loss. My initial stop loss is quite wide. I'd also use my time stop. Time stop for me is if I'm holding a stock for 60 trading days, it's about 3 months, and it hasn't kicked on. Well, then I'll rotate it out of my portfolio, even if it's above the stop. It just lets me efficiently move capital to new ideas faster. But for now, look, I'd be holding it. Let's see if it can establish that support around these moving averages, and stay above them. For now, it's a case of just watch and see whether it can. Is this dip bought? Is it supported? Do we get that new platform developed for potentially higher levels?
Okay, fantastic. Hi, Tim. Can we please have a look at IVR?
Yeah, well, this is taken off. Yeah, well, this would definitely be a hold for me if I had it. It's and you can see how an entry could have formed. So, just trading around the moving averages, then traded above the averages, pull back to, and then we had another secondary break. That was in September. That was a potential entry point. So risk could be managed at that point. So entry in mid-September, stop just back below the moving averages, and now it's really taken off. So I'd struggle to buy this one now because I don't know how to manage the risk around in a considered way. So I'm not going to have a stop loss back at the 50-day moving average, which is 50% below. So it's just way stretched above the moving averages. So I can't manage risk around. So I'm not a buyer, But if I'd bought earlier, I'd definitely be holding it, and I'd be having a wide trailing stop to give it room to move. At some point, it's going to revisit the moving averages. So the moving averages may move higher. It could pull back to them. So it doesn't necessarily mean it's got to come all the way back to where it is now, because the two can converge to a level which is above where the 50-day is now. So that's why, I'd hesitate to buy it now, because that retest of the averages will come at some point. And that maybe that creates another buying opportunity. There's probably some, maybe it's heading towards some overhead resistance. But look, I'd generally, if this is in my portfolio, I'd be letting the profit run, and wide trailing stop. See how long I can stay with it for. See if it turns into something which goes a lot higher.
Okay, fantastic. G'day, Lloyd. Let's have a look at TWR.
Yeah, it's this is a motion trader stock, and it's been trending nicely for the last almost a couple of years now. We're just getting a sideways consolidation along the moving average. It's constructive price action. It's not dissimilar to what we saw during March. You can see the same sort of thing, a sideways price action on the moving averages. Then once it had enough time consolidating, it broke higher again. I suspect the same sort of thing could happen here. I think we can see higher levels than this. The trend remains up. Moving averages are still up. I'd be happy holding it. It could even be, it could be it's possibly a buy here as well. So at current levels, probably like a 9% stop would possibly work. And alternatively, waiting for it to break above, maybe breaking above the mid-September high, could be another play to get on board. But if I had it, I'd be happy to continue holding it.
Okay, fantastic. Let's have a look at, actually, Kirby's got a question here. Would you like to comment on the XSO versus the XAO and XJO rotation? If that makes sense.
So what do we have again? The XSO.
XSO. Let's have a look at XSO.
So that's a small orders. Yep. So we've got the small orders. And what are our other ones? Just read it to me again.
XAO,
sorry, the XSO.
XAO, which is the all ordinaries.
Yep. So rotating. So Rog, please read the whole thing out to me again.
Would you like to comment on the XSO versus the XAO and XJO rotation?
And XJO. XJO being the ASX 200. Well, it's been the small cap sector which has really been firing, and you can see that playing out when you compare the ASX 200 equal weight to the ASX 200. So that's the equal weight, and now here's the ASX 200. You can see the ASX 200 has been going sideways. The equal weight has been rising. So that's telling us that those big cap stocks aren't doing so much at the moment. And it's the smaller end of the ASX 200 where the interest currently is. And then that plays out again when you jump to the small ordinaries, which is stronger than the equal weight. And then when you jump to the emerging companies, which in turn is stronger than the small ords. A lot of this, I think, is due to those smaller to mid-tier mining stocks. I think they make up a large portion of the emerging companies. That's why we're seeing a lot of strength there, and that probably also flows through to the small ordinaries as well, which is the top 300, excluding the top 100. That's how they work out the small ords. So the ASX 300 minus get the top 100 out, and what's left, that's the small ordinaries. Look, this is something I've been talking about in my weekly strategy sessions for a long time, that we've been seeing strength coming through at the smaller end of the market. Much of my portfolio is focused in this segment of the market as well. It's Yeah, look, I know I won't speculate on the fundamental reasons for it all, but it's, we could see it developing in the price action, and it's a case of letting what's working work, and this is where look, I think this is one of the things Motion Trader does well, and that it's scanning the entire market. It's not just focused on the top 100, which isn't the area of greatest interest at the moment. It's what's happening outside those household names that most people don't know. And you find them in an index like the emerging companies, and we find them through momentum. That's how I find them anyway. It's fine looking at the price data, and you mightn't know the company's name, but you can see the price movement, which draws attention to it. It's like putting a spotlight on it, and then that's where some of the great opportunities have come from in the last couple of months.
Yep, fantastic. All right, Devender, let's have a look at EMV, please. E, M for Mary, and V.
It's lost that breakout momentum. Has come more quickly. Like, I don't like it when they rally quickly and then they come back quickly. It's like when you get a strong rally, yeah, you often get the pullback when it gets stretched. I think what I like to look for when we get the pullback, it's the pullback being supported, and that it holds on to much of its earlier gains. Lets the moving averages catch up. Like, we saw some positive price action from it back in this period here, back in mid 2023. We did get a strong rally above the averages and a pull back, but it's held on to much of those initial gains, and we got the sideways consolidation of the moving average followed by a breakout. Strong move up and then similar price action. The dip was being supported, then it ran up again. Whereas what we're seeing now is a bit more like what we saw in June 24. So it went straight up, then it came straight down. It wasn't ready to continue on. This isn't a dip I'd want to buy at this point. If I wasn't on this stock already, I'd just be watching from the sideline. If I did have a position, if I'd bought as prices were breaking out, I'd probably have a stop loss now, just not much below the current low. Maybe $1.78 thereabouts. Would be a discretionary stop for me. So saying, look, it started to look good, started to break higher. It hasn't been able to hold that breakout. There wasn't support on the way down. I'll give it a touch longer, but if it comes back to my stop loss, I'll just say, look, hasn't worked. Take a relatively small loss and move on to the next idea. I think it's one that really needs to get itself back above the moving averages in quick order to keep a more bullish scenario alive.
Okay, fantastic. G'day, Drew. Let's have a look at CST. Strong break higher here. It's not dissimilar to the other smaller stock we looked at not long ago. It's like, if I had a position, I'd keep it. I'd have my wide trailing stop back down here around the 50-day moving average, leaving lots of space to consolidate and then hopefully continue higher. But I couldn't buy it at the moment because it is too far above those moving averages. It has pulled back. It has pulled back from its highs of 11 down to 9.2. Potentially it could like. I'd like to see. It's kind of getting within range of being able to buy at current levels and have a stop about 25% below, just back down towards just below the 50-day moving average. But I'd prefer to watch it for a few, maybe for a week or two, see if it can. Because I don't want to see what happened in EMV happen, where it just quickly sort of like makes its way back down to where it started. That's not the sort of price action we want to see now. We want to see it holding onto its gains. So rather than that, what we want to see
is more price action like this, where it chops sideways and those moving averages catch up, then that could create a buying opportunity as the moving averages catch up, or as it breaks higher again. So I kind of want to see what does the next chapter look like? Is it the come straight back down, or is it to move sideways while the buyers are trying to accumulate the stock on the pause? And so, yeah, it'll be interesting to see how that one plays out, and that would determine whether there's an opportunity to buy or not. But if already in, I'd be happy staying in, wide stop, see if we get that second scenario with another kick higher.
Fantastic. All right, let's have a look at Roberto's MEI.
Yeah, there's so we had this lengthy period below moving averages, and then flip back to the good side in May, and it's been generally like just making its way higher along the moving averages with pauses. So rallies, and it pauses into the moving averages, rallies, and then we got a bit of a messier sideways consolidation, a bit of a zigzag. You can see the zigzag correction, which briefly came below the moving averages before the buying kicked back in to the moving averages and pushing higher again. So look, it gives the appearance that it's being supported on the pullbacks, and it's broadly making its way higher. It's recently just broken out of this. You could say there's a bit of a look. This isn't a proper line to draw, but it gives, because we have this downward period. But other than that spike, you can see how it's compressed within a bit of a range and just recently broken out from there, and after trading along the moving averages. So I think that's constructive price action. I'd be staying in if I was already in this stock. If I wasn't in it and I liked it, it probably could be bought at current levels with say around a 20%, 20 to 25% initial stop. It's trading on its lows for the day. So usually when I see a stock open at its highs and it's on its lows, where later in the day I say, well, look, I can afford to watch this for a few days and see whether it does now pull back and a bit more consolidation, and then I could consider picking up a little bit lower or on a break above the recent high. But yeah, if I was in it, I'd be happy to stay on board.
Okay, fantastic. Thanks, Russell. SPZ, please.
Breaking higher again. It's been a fairly well behaved sort of trend, in that it's it rallies. We get the sideways consolidation, rally more side, and you can see how it just steps higher. This has been the largest of the consolidations really since the uptrend got underway. If we say the latest uptrend got underway in August 2022, and it's what I said earlier about medium term being able to stay on stocks that trend for 1 to 3 years with that wide trailing stop. This has been a motion trader stock for some time, and I think maybe that April sell-off could have knocked out the wide trailing stop. But it's I think if a wide trailing stop was knocked out in April, it's probably it's probably already given another entry opportunity as it broke above probably above the August high. It's really been a sideways movement over for much of this year, and this sideways consolidation has sort of developed into getting back above the moving averages in August. Then we've got that corrective looking pullback to the averages, and now we're getting the strong rally off the averages. So it gives the appearance that the trend's re-engaging. The time to have bought it was probably a few days ago, just as it was breaking back above maybe the September high. It's had a bit of a run now, so I'm probably not as enthusiastic to get it today. But if I was already on board, yeah, I'd be staying on and seeing where this runs. This uptrend remains in place.
Okay, fantastic. Hi, Dennis. Let's have a look at MTH.
Consolidating nicely along the moving averages. So we saw like a similar period during August where it had a bit of a run sideways, broke higher, and it's had a run, and now we're getting this sideways. Are we going to get another break higher? If I was on board, I'd be staying on board. I'd have my depending on where I got in, but my stop would be back below the 100-day moving average. I'm just thinking it could be a buy at current levels with maybe a 18 to 20% stop. I'd probably prefer, rather than just buy it at the moment, maybe buy into more momentum, like looking for like a move like we saw off the moving averages in late August, where it rallies and goes above previous highs. So looking for a rally off the average, probably breaking above the 23 September high. So look, could be bought at current levels. My preference would be buying to a bit of strength. But there's potential to see, definitely potential to see this continue higher. Path of least resistance looks to be the upside. It's in an area. I don't know what sort of tenement they have with their gold and silver, but it's they're in that sort of area which is showing plenty of interest at the moment. So certainly one I'd be staying with if I had it, particularly had it from lower levels.
All right, there's a couple of general questions in, but we'll push on with the tickers for now, and I might skip to them at the end. Let's have a look at WDS, please.
Yeah, it's struggling with the oil price. Oil price has been struggling for a while. I talk about this each week in the Friday strategy sessions, and I've been saying the oil sector is just one to leave alone for the moment until we get like clear upward momentum developing, and that means price above rising moving averages, and that's not something that's probably going to happen in the near term. Looking at this chart on its own, it's not a bad structure in that it's gone from below the moving averages to above, and like it could be argued this is just this is an initial zigzag correction. This is a zigzag correction to that initial rally. The key to that would be it would need to like hold its ground at current levels and fairly quickly make its way back above the moving averages. I think probably the way to play this is certainly not a buy at the moment for me. But if I'd bought a position in recent times and wondering, look, how if I'd bought a position in recent times on the basis of some momentum developing, I'd probably want to have a stop, not too far below the current lows. Like if it's now consolidating below declining moving averages, if it breaks lower again, I'd be inclined to say, look, it's not working for now. I'll cut it and move on, come back and have a look at it later on perhaps. But I don't want to persist with it and just in case it continues to weaken away. If I can't get a foothold here and get back above the averages, my escape path would be not too far below the market currently, and I'd be happy to walk away and maybe come back later.
Okay, thank you. Taufik, what's the take on BRN after a long consolidation? The last 2 days look strong. Is this a real breakout?
Yeah, it's an interesting price action. It's a volatile stock because we see this sort of price action a bit where you get these you can just see them everywhere. You get these strong up days, or a few strong up days, and then a lot of the time it makes its way back lower. So is this the one that continues on? And it could be. It's not quite there from the way I'd look at it, because it's like the moving averages are still in decline. We just got a spike above it. I guess one thing in its favour is that So the moving average is still down, but you could say, look, it's built a bit of a base around 19 cents, and we could also put an upper line on that, so it's like a triangle type pattern, a compression which is just broken out from. Where's it currently trading? Around 24.5 cents. So I wonder, if someone likes this stock and they wanted to have a speculation on it, it could probably be done with say an 18% stop loss, which I think is pretty reasonable for a stock of this volatility. And alternatively, we could say, look, let's just see whether it holds onto its gains over the next few weeks, and then maybe consider it. But with this sort of stock, there's every chance that you say, okay, let's do that, and then we come in tomorrow and you have another up day, and then it's up at 29 cents, and then I'll be saying, oh well, now it's too far above the moving averages. How are we going to manage risk? Now we need 30%, and so it starts to become harder to manage the risk around it. So I'd be inclined, if I really like this stock, I'd probably go with the breakout, have a 20% stop loss. I think it's extra speculative because the moving averages haven't crossed yet. There's a bit of work to do for that to happen. But it's the risk with a stock like this is it gets away from you a bit in the near term, and then you just can't find a good entry point, and it becomes harder then to get a position. So I think a position could be taken, but yeah, I keep using the word speculative because it's not a terrific setup at the moment, but I could see how it could develop.
Okay. Hi, Jennifer. Can we have a look at PDN, please?
So the uranium stocks are looking quite interesting. PDN is, well, we've got these rising moving averages, and it's been consolidating, sort of like edging its way higher. So we get a strong rally, then we get a corrective pullback. We get a strong, reasonably robust rally, then this overlapping type consolidation. It's like the sensitivity does seem to be to the upside. I've got some of this. I think I might have bought it when it was starting to break. Looked like it might have been breaking higher in mid to late September, but then it had another pullback. I think, and probably also good to couple it with looking at the uranium price. Again, this is something I talk about in my weekly strategy sessions. If you like this sort of stuff, that's where you should be on Friday. Or, of course, you get the replay on the weekend. Looking at uranium, it's had a nice rally off the moving averages. It's pulled back. Are we going to get a bit of sideways consolidation while the averages catch up? So if that were to happen, does that mean a stock like Bannerman might just track sideways along the moving averages for a few weeks as well? That's entirely possible. I think it could possibly be bought now with probably maybe about a 17% stop below the 100-day moving average, probably below the September low. So I think it's asymmetric from that perspective because a 17% stop is, I think, relatively small compared to the upside potential. It's a stock that could double. It may not, but it could. And the other uranium stocks have generally similar metrics, although they're all a little bit different. Alternatively, it's watch it for a bit, and if we get a clear break above these current recent highs around 878, so that might be say 910 or something like that. Maybe say, look, okay, now it seems to be getting some more upward momentum. Let's go with that. So different ways to play it, but I think it's an area worthy of some exposure.
Fantastic. G'day, Charlie. Let's have a look at PNV. Infinelli.
Yeah, interesting play here. So it's back above the averages, and the averages have crossed, and we've got that sideways movement across the averages. So this is often the makings of a good setup. What I'd be looking for here is, like, it might not be quite ready yet. There could be some more back and forth, and then maybe we get the breakout. This is often how this type of setup develops. I'd probably be looking at, if we do get another week or two of sideways along the moving averages, I'd be looking for a break above, like it could be the 7 October high, sort of like going with some upward momentum in it. And it probably won't take too much to turn up in the motion trader signals as well. The moving averages of cross, I need a 70-day high for the motion trader signals, and also not triggering the volatility filter, which could void it, but that doesn't look like the risk at the moment. I don't think it's quite there yet. I'd give it a little bit more time to watch it. If I was in early, if I got in earlier, I'd probably stay in it then, and can manage risk with a stop below the moving averages. But yeah, I think it's a potential setup in the making.
Okay, next one's ALK.
I've got some of this one myself. Yeah, look, it's running. Moving averages are up. It's trending higher. Made new highs a couple of weeks ago. It looks like it might consolidate. Might need to just pause. It's the big momentum really sort of stopped in early September. So we could almost say it's been just going sideways for the last month, because it really hasn't made much headway since early Sep. It could do anything. It could continue up in the near term, or it could just as easily sort of like make its way sideways, and we get a bit more of a price action that looks like that as the moving averages catch up. I'm of course just making it up, but it's made up out of like price sequences I've seen many times before, where prices are stretched and they just work their way back to the averages before having another run. Whether this one does that, of course, we never know. But it wouldn't be at all surprising. So I'm happy to hold it. I wouldn't be a enthusiastic buyer at the moment due to that possibility of more consolidation. But when I say that, I'm positioned for further upside. As I was saying with the ASX 200 earlier on, I don't necessarily want to buy today because I bought earlier on. So I'm happy to run that position with a wide stop, and I'm positioned for further upside should that materialize in the near term or after a bit more sideways chop.
Fair enough. Hi, Victor from Melbourne. Good on you for coming along. George, g'day. Can we have a look at AL3, please?
AL3?
Yep.
Yeah, well, it looks like a pullback to the averages at this point. So look, that's not dissimilar to ALK at the moment. The point I was making before, it's sort of like the big momentum stopped, and it's sort of like pausing and chopping around, and there's that price action where it comes back to the moving averages. So just expanding on what I just said a moment back. It's like I've seen so many sequences of price action over the years. You kind of get a feel for some of the scenarios that could play out, and one of them is you get those big moves, and big moves often lead to consolidation that lasts a little bit longer than people are initially anticipating. This one here at the moment, it looks like a proportionate pullback in terms of price. It's like if we put Fibonacci's on it, it's probably around the 50%. 50% to a touch lower, to the lower end of the Fibonacci range. So it's a proportionate type of pullback. I'd be happy staying on this one for now, particularly if I bought in at lower levels. I think a stop loss could probably be below the this low from 29 SEP, maybe around 20 cents thereabouts. If it were to not be able to like hold the line at current levels, and it then takes another turn and dips below the recent lows, I'd say look at 20 cents. I'd be saying, look, this is not working. It's now developing a series of lower lows, and it's below the moving averages, and it's probably not the place for my capital anymore. But at this point, I'd be happy holding. I'm probably not a buyer. If I really liked it and I wanted to be a bit speculative, I could buy at current levels with like a say an 18% stop. But I prefer to buy in a bit of momentum. I'd like to see it rally off the moving averages. Like if we get a rally off the moving averages, and bit of chop and then another break. This is sort of like where I'm looking to maybe buy, clearing the mid-September high. Got to see what price action we get. But that's the sort of thing I'd be more inclined to buy than as it's just sitting on the moving averages. But I think one to be happy holding for now.
Okay, fantastic. The next one we haven't looked at yet. PPM, please, from Tony.
PPN, is that right?
M for Mary.
Running nicely. It's like, like is that like a big basing period? Let's clear these off from another time. Is this a large basing structure which is broken out from? Draw a pretty clear range through there as well, so you can see like how it was range bound, base building for a couple of years, probably a bit over a couple of years, and then we've got the breakout. Look, if I was in this, I know it's a motion trader stock. I remember seeing the signals a while back. I'd be happy letting this one run. At the moment, it's a pullback to the moving averages. It's a sharper type of pullback, but it has had a pretty decent run without a significant pullback. I'd be happy to leave this at the moment with the wide trailing stop. See what I want to see now. I want to see it like get a foothold around the above the 100-day moving average ideally, and start getting some sideways price action just to establish some sort of a base, and then potentially rally off that. If prices make their way below the moving averages and start consolidating beneath them, well, that's another matter. But we don't have that price action yet. At this point, I'd be looking at this with a positive view and saying it's a pullback to the moving averages, like we've seen before, a pullback to the moving averages. Let's see if it can consolidate. Let's see where the buying of the dip comes in, and whether that can push it higher. But it is coming off. It is coming out of a big base. So big bases often lead to large trends. I think we can see this one move higher over the months ahead.
Okay, fantastic. CETF from Brian.
Well, that's a Chinese ETF. So we've looked at the Chinese market already. I've got this ETF myself. It looks just like the Chinese A10 or A50, Chinese A50. It's like there's some currency differences because this is traded on the ASX, so it's in Aussie dollars. But look, it's coming out of this sideways consolidation recently with a strong run. We've got some consolidation happening, but the moving averages are moving up. Really, everything I said on the Chinese market, that it means the same for this one as well. It's if the Chinese market does well, barring something extraordinary happening in the currency markets, I'd expect that this ETF would closely follow what happens in the China index.
Okay, next one's from Shirley, LTR.
I've got some of this one too. Oh, well, this is a really interesting one. We've had this this sideways movement going on since July. So that's about 2.5 months. 2.5 months of just this tracking sideways along the moving averages. The moving averages are generally pushing up. I think I think this is a positive price structure, and it's like this is a stock which has been down and out for a long time, and it's flipped from below the averages to above. We've had a couple of upward pushes, and now we've got this sideways consolidation. Often this sort of price action resolves to the upside. I understand this is a heavily shorted stock, which brings interest of itself to the table. It's like at some point, do the shorts need to cover if it keeps pushing higher, or can the shorts continue to bring stock to market and hold it down? So it's a bit of a tug of war at the moment. Every time it tries to break above $1, it gets knocked back down. It's at some point, I think, if it can have another push up above up to maybe $1.04, maybe the upward momentum can really start to engage, and we can get a strong move higher. That's how I'm positioned at the moment. If stop loss wise, I think a break below the October low would be one potential exit point. Another exit point would be a bit further below the 100-day moving average, and then we've got below these lows from a month or further back. But at this point, I'm happy to go with this. In terms of getting in, if someone's looking and think, look, I'd like to have a go at this, maybe I'd, rather than just buy it now, maybe I'd give it a few more cents and buy it at, say, like $1.04 or $1.05. So I'm buying a break above some recent highs, and that just increases the odds, I think, of that momentum push kicking in, and it really starts to run, as opposed to buying it here and then find that the supply comes on and pushes it back down again. So I think this is one to try and buy into a break. But yeah, I think interesting one to watch what ultimately develops here.
All right, the final three here, Jace, we're going to get on to. Let's have a look at QOR, please. We've already had a look at BRN, and we've already had a look at MEI, just on this one there as well. So yeah, let's get on to this
QOR,
one.
strong upward trend in place. This is just nice rising moving averages. Price is running well. It's stretched above the averages, so I'm probably not a buyer at this point. But if I had it, I'd certainly be holding it. I'd be using my calculated motion trader trailing stop, which is going to be probably back below the 100-day moving average. So giving it lots of room. But look, as we can see, this trend is up. There's no reason why this previous high from October 17 can't be taken out in the coming months. Near term, maybe there's a consolidation coming, like we saw in after the big July-August run. There was a consolidation back to the averages. That sort of thing is always possible, but ultimately it's let winners run, stay on trends for as long as possible.
Okay, fantastic. CSL.
Yeah, and continues to remain weak. It's like this is I wouldn't be in this stock. I've spoken quite a bit about it over recent weeks and the strategy sessions. I think we've also touched on it here a few times as well. When we got this, so just getting the bigger picture story first. There's that big sideways trading range, 5 years of it, and we got a decisive breakdown in August. And from August, this was a stock to get out of. Big breaks from big ranges, you don't want to mess with those, because they can lead to large downside moves. So far, it's not a large downside move, but it has been continuing to lose ground. I don't want to try picking lows. It's like to get interested again, it's got to get back above the moving averages. The averages have to turn. That's going to take a while for all that to happen. I'd just be out of this stock and just leave it alone. It's like, yeah, it's a big top tier stock, but even just because it's a big top tier stock doesn't mean that it can't go through a bearish phase that loses ground. So I'm not saying it's going to continue to trend lower. I'm saying it could continue to trend lower. Look at a stock like Woolworths and how it's trended lower over the last year or two. So just because it's a top tier stock, people say, "Oh, blue chip," but yeah, blue chip's great, but blue chip can go down too. So I want to manage risk around it. So from my medium-term trend following perspective, I don't want this stock in my portfolio. If I've been holding it since the float and I'm a long-term buy and hold, well, that can be another matter. But yeah, if you're that way inclined, you're probably not watching, I'm guessing. So that's how I'd be managing this one.
All right. CAF.
CAF, was that in?
Yeah, CAF. Yep, that's the one.
Yeah, look, still trending higher. It's had a pretty quick pullback to the averages, but the uptrend's still in place. Here's a similar sort of situation back here in 2020. So it rallied and then had a quick pullback to the moving average, and that led to several months of sideways price action, and then things ultimately moved higher again. So it's not to say that it's going to be an exact repeat of what we've seen before. It almost certainly won't, but it's probably a sign there is more consolidation coming. It's probably not just going to go up and make new highs in the near term. I think it's had a good run off the April low. It might now need some consolidation. That consolidation then could lead to higher levels. So there's a broad upward trend in place. If it was in my portfolio, I'd be happily holding it, not watching it every day, not watching it too closely, just knowing where my calculated trailing stop is, know where my exit point is, and that's how I'd manage it. Probably no hurry to buy it, but yeah, probably quite happy just letting it consolidate at this point.
Okay, and last one for tickers, BHP, please.
Well, this comes back to the mining index, and it's interesting when you compress BHP up, you can see this same 3.5-year trading range. So we're seeing other stocks breaking out. BHP hasn't quite broken yet. It's starting to build that structure. It's gone from below the moving averages to above. The averages have crossed. It's now becoming established above the moving averages. It's just sitting below this big resistance area around $42. You can see that dates back to August 22. Probably not big, but it's notable. It's a notable resistance point. I think BHP is getting ready for a break higher. Maybe there's some more chop in the near term, but a break of these recent highs would probably be a sign that the momentum's coming in. I think it'd actually look better if it took another couple of weeks of just trading sideways and then from there giving a break higher. I think that would be the next the next entry point. Look, I'm optimistic on BHP. Looking at this, it's still it is still within a range. Hasn't broken out of this big range yet, but I can see how the price action is building. This is how trends develop. So it's got the building blocks of a trend. Then it's a case of if those building blocks continue to stack together, what sort of trend does it then develop into? These are all the things we don't know, but it's a point of case of like, well, look, I'm happy to position some cash in a situation like this and see what happens. And I think the more you position in prospective setups where they're above rising moving averages and you have those building blocks of trends, well, then some of those trends probably will develop into something pretty impressive. Some will just fizzle out or do something modest. But everything doesn't need to be a spectacular success. I think BHP's got that potential to go into a large trend. But yeah, let's let's see whether we can get to the next stage, a bit more consolidation and a breakout.
All right, fantastic. Well, I'll give you a bit of a breather, Jace. We'll just finish off with a couple of general questions, if that's okay. Firstly, there's one around trailing stop losses for Selfwealth. We have stop losses; they're just not trailing, so you can set stop losses. You just got to manually adjust them. It's not to say we're not looking at trailing stop losses in future. So it's been brought up and having a look at it. The next question's around AI. Look, I don't have much to comment around AI because there's such there's such a like how has it been, have we been affected? Probably, I don't know. It's just such a big topic to cover, and I wouldn't know where to go there. But that's your break, Jace. Maybe you can comment it. Has it affected your motion trader service?
No, it's like motion traders are like it's rules based, and those rules are created turned into algorithms which the data goes through. So it's no, it's not an AI based service, and it's old school trading rules applied through new age computers and using algorithms and data. So no, AI is not a big part of that at all. But look, the calculated having the trailing stop function, that'd be a good innovation with the Selfwealth platform at some time, perhaps.
Mixed with AI, so it can do it all for us, right? So maybe one day. Lastly, let's just have your thoughts. There's a comment in there around gold and silver, Jace. Is it time to get out, or are we still holding on to this trend as well?
Look, this is something I go through at length in my Friday strategy session, so I won't pull up all the charts now. There's too much stuff to go through, but it's a case of it's an extended trend. It's stretched above moving averages, but it's a case of staying with trends for as long as possible because they can surprise people, and they do surprise people often on the upside. I'd be careful about buying something which is stretched above its moving averages, but I'd be happy to hold something which is stretched, which I'm in at good levels. We don't know. No one knows. No one knows how far this can go. But there could be a 10 or 20% pullback and still comfortably remain within an upward trend. That's the difficulty with buying things which have already run hard, because you've always got that risk. If I buy today, am I down 20% in 2 weeks? We get a sharp pullback. Entirely possible. But if I bought much lower and I've got a big margin already in there, if I get a 10, 20% pullback, it's like, well, these things happen. And then things can consolidate and they can kick higher again. So it's a trend I very much want to remain on. Yes, got to watch your entry points, wait for the right setups. There've been plenty of good setups, which I've spoken about in the strategy sessions. And I'd be waiting for the next good setup before probably putting more capital into the sector. But trying to pick tops is like such a dangerous game. You look at the stock market in the mid 90s, like there was, I was one of the people trying to pick tops, and the market ran for another 5 years. It's like, don't pick tops, let momentum do what momentum's going to do, and have an exit plan for when it reverses.
Yeah. Fantastic. Well, look, there's so much I want to say, so much I want to talk about. There's another question around, obviously we can't really comment on other products, Lloyd, around spread betting, so you're going to have to do your own research around that. But I hope that we've learned, I've learned, certainly even after all these couple of years, I've learned a lot just from this session and just reconfirming a lot of knowledge. And I hope everyone does as well. This show is not about us telling you what to buy or sell or hold. Once again, it's about educating on how we entry and exit out of things, right? So there's no set percentages or ATR things. Yes, we have a set way of doing things, but you've got to adjust to the way you would like to trade and invest and around your goals and what your ambitions are, right? So that's why we're a general advice only show. It's all about just giving you the education and entertainment as well, right? As we say. But don't forget the exclusive offer. It's all in the notes below, the description below. If you're an existing client of another broker and you'd like to try out Selfwealth, all this knowledge that Jason has taught us, it's all at his Motion Trader service, and a lot of it's free. So definitely go and check out his his education there. You can just download and get started, right? Because you can learn it all there. Otherwise, thanks, Jace. Thanks for another great week. We're always going consistently well over 1 hour, so it's good to see that our ambition of getting it down to an hour is going well. But it's all good there.
Yeah,
mate.
look, that's been fun, Rog. And look, anyone can get a free trial over at Motion Trader and see what the process is all about and see it in action. And so that's always an option for people to come and have a look at. But Rog, that's been fun as always. Thanks for having me on. And look forward to next week, and we'll go through it all again.
Yeah, sorry for missed your tickets today. Just got to jump on a bit earlier. Thank you, everyone, and we will see you all again next week.